Good morning, traders. It is Saturday, February 1st. Where the heck did January go? Man, that was a quick month. You can see that we had a really nice start to the year. Rally, 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 keep pushing higher. All the gains in January were just stripped away. We had a close Friday on the low of the day. We're about to test major horizontal support here. What I'm going to do this morning is I'm going to go through market analysis, take a look at where the market might be going next week, how we're going to approach it, how our swing trades are doing, what your plan should be for next week. So if we take a look here, we can see the gray line is a VXX overlay. It measures option implied volatility. When it's super, super low, that means there's very low risk in the marketplace, perceived low risk because asset managers and traders are not buying any put protection. So the implied volatility continues to go down as the market just inches its way higher and higher. There's no risk. We got trade deals. We got Brexit happening. The Fed is very accommodative. Economic growth is fine. Everything seems to be lining up. So there's very low risk in the marketplace. As soon as you start having some trouble, option implied volatilities increase, and we see that reflected in the VIX. Now, the VIX is a farther out indicator, so it measures back months, say a month to 2 months out, versus the VIX, the VIX, which really focuses on near-term options. It takes quite a bit to get the VXX going, but it is finally starting to increase. Coronavirus is getting its due. It was discounted by the market early on because the damage was not really known, but now we know it is spreading quickly. We know that China is trying to stay one step ahead of it. We know that major airlines are no longer flying to China from the U.S. Rail has been shut down in many parts of China. Road travel is down 25%. Air travel is down 40+%. This is all happening during the Chinese Lunar New Year. So it is going to have an economic impact. Right now, analysts feel that at current levels, it could decrease Q1 GDP in China by 2%. That's a significant number. So we're starting to see some selling, but I'll tell you that part of this selling is because bullish sentiment was off the charts high. You had people loading up and loading up and loading up on bullish positions, and we had this nice tight upward trend line in a tight channel. There was the first sign of trouble, gap down. We knew that after that gap down, I've been telling all of you, we're going to have some trouble. This was the move Monday morning. That was the first reaction to Corona. Then we had a big gap down on Monday. We tested 322 support on the SPY, and then we spent some time rallying back. And then Friday, no one wanted to go into the weekend long, so they took profits and they pushed stocks down. We did see some heavy selling on Friday, and I'll zoom in on the daily chart to illustrate that. I believe that we're going to have probably another nice move down, but I don't believe that it will last very long. I believe we're going to see a probe for support and a bounce. What might that level possibly be? Well, I think 320 on the SPY could be a resting point for the market. This is a very nice horizontal support level. It was actually a breakout back in here, and we could at most, I think, get down to the 100-day moving average, which is around that 312.50 level. But if we do that, it's not going to last long. Buyers are lined up. I've also mentioned that when you have a very, very strong trend like this in the market, it's hard to turn that type of strength. The macro backdrop is still very, very good. Earnings have been excellent. Guidance has been excellent. Economic growth is still strong. We had a little bit weaker than expected PMI on Friday, but GDP for Q4 came in at 2.1%. That was the first reading. Actually better than expected. Good reading. So the economy is still in decent shape, and they're actually talking about new tax cuts this year as well. So there are plenty of positives to keep buyers engaged. As long as there aren't any credit concerns, which there are not right now, the market will have these little dips, and I'm expecting us to find support and then move sideways in a trading range for the next 2 or 3 months. Stocks need to grow into their current valuations. They need a pause. You will see them move higher and lower within that range. So, as far as selling out of the money bullish put spreads, yes, still the best trading strategy. Now, I've been mentioning in my videos, if you watch the swing trading video that I posted on YouTube, typically I release that a few days later on YouTube, but this week I felt like I want to release it to everybody, get these trades out there. If you watch that video, and I'd encourage you to do so if you haven't, throughout the video I mentioned you should think about having some type of hedge on. Buy some VXX to hedge these bullish put spreads. As the VXX goes up, you will be able to make money on the VXX and offset some of your losses on your bullish put spreads, which incidentally, because we're so selective in the bullish put spreads that we try and put on, those stocks should hold their own because they've got relative strength. They should still be staying above that technical support level. So there's a double whammy for us. We have the benefit of being in strong stocks that are still in decent shape, even with the market pullback, and we have money that we're making on our VIX protection or our VXX protection. You can also buy SPY puts to help hedge that position. So instead of legging out of all of your spreads, let's say you've got 5 to 10 bullish put spreads on right now in different stocks, instead of closing all those down and panicking when you get a market move like this, the easiest thing to do is just to hedge yourself with some SPY puts or VXX, because then you don't have to close all those positions down. You're in them because they have relative strength, and that hedge will actually make you a little bit of money. Well, that's exactly what we did Friday. We bought some puts intraday. We held some over the weekend. Had a 300% profit on those puts when the market opened Monday morning. More than offset any losses. And then boom, 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 here came the market bouncing right back. By Thursday, I'm feeling pretty good about our bullish put spreads because now they're out of the money. I could breathe easy again. Time decay is working in my favor. No reason to shut them down. Then we get another nasty day on Friday. Well, we did buy puts again during the day on Friday, and I held some puts over the weekend. So I'm currently long the February 7, 328 puts, and I bought those near the close on Friday. So I've got a hedge over the weekend. I'm expecting to see some weakness, but I'm also looking for, and this is the key point here. Here's what we're really looking for. We want to have a nice flush out, maybe a couple of red bars, and then we'd like to see a big drop on the open. Maybe it takes us down to the 100-day moving average. I don't think we're going to get down that far because the price action has been very sticky. That means that buyers are nibbling the whole way down, and they want to buy. They're just not aggressive buyers yet, but they will be when they see this pattern. So bullish speculators are about to get flushed out. That's what's happening right now. Been mentioning in my comments that this first wave of selling did not get them out. We had this big drop, whoosh. They could not really adjust to that, and on the first drop, that's where they start wondering, oh my gosh, I can't believe this is happening. But I'm going to hang with it for right now and see what happens during the course of the day. Well, we find some support, then the next day the market moves higher, they breathe easier. Thursday they're breathing actually pretty easy, thinking, okay, we're going to go back up and take out the high. This is a nice little support level. Friday, nasty day. Now there's some hand wringing. But I think that it's this crackdown right here and a big sell-off Monday that really forces them out of their positions. So we've seen enough selling. Now they're already starting to wonder whether or not they're going to be able to hang on to their positions. Another big drop, that gets them out. So what we're looking for is a big drop and then a rally the whole day with a close in the upper quadrant, leaving a bullish hammer. So let me see if I can find one like that one right there. Like that one right there. In fact, I think this will probably be a similar pattern, and I referenced this last week when I did my video. where the market had been strong previously, and you're seeing red candles, but you're seeing some green candles, and the market's just super resilient. It does not want to go down. There are buyers, but there are sellers too. So it's just a gradual drift lower with bounces all the way. Then you get a long red candle, you get a long red candle. This is what we're looking for. So the bottom falls out, the low is put in, buy, 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 all the way back until that candle closes on its high. This type of bullish hammer on heavy volume would signify a short-term low, a capitulation low. Typically, when I say capitulation, I'm looking for a 10% correction, so probably be more along the lines of this, where we get that steep sell-off, rally, intraday reversal, close on the high, then the next day is a long green candle closing on its high, similar to what we've got in here. That's really nice follow through. And then that was a temporary low. When we start to see this formation, that's when we really start putting on a lot of bullish put spreads. That's when we circle around and look at all those earnings reports that have come out. Positive reactions, great guidance. So we may still have about another week to 2 weeks worth of weakness, but I think in that time, scientists will be able to gauge the spread of coronavirus and what the impact might be, and if there is any type of cure. Right now, there's still a lot of unknowns. The market hates uncertainty, so it's going to continue to drop. The other factor that we have working against the market this week is mega cap tech stocks. We heard from Apple, we heard from Microsoft, we heard from Amazon, we heard from Facebook. In general, those earnings were excellent. But it's the reaction that's the key. The stocks were not able to advance after posting gangbuster earnings. That tells me that the market is a little lofty here. There's going to be a little bit of profit taking, and those mega cap tech stocks tend to generate lots of excitement, lots of enthusiasm. So profit takers and short sellers during earnings season typically do not get aggressive until the last of them has reported. Well, Google will report results February 3rd, and that'll be the last of the mega cap tech stocks. So some of the air is going to get let out of the balloon. Bullish speculators are going to get flushed out of the market. Coronavirus is going to spook some people out of the market. We know that. We've been preparing for that. So no big surprise. Look for a little bit more weakness next week. Buy some VXX to protect your bullish put spreads. Buy some SPY puts. Expect a bounce. And your bullish put spreads should be the first to recover if you're in the stocks that I've been suggesting. So let's go into Friday's chart. I'm going to take off the VXX, but you can see the nice spike that we've had in it. And we'll go in, take a look at the 5-minute chart. And so I'm also going to take a look at, well, we'll start with this 5-minute chart. You can see the steady decline here. Big selling. You've got the market opening a little bit lower, and then this nice, tight trading channel. Well, I tried to call a bottom in here on one of these bullish hammers when my 1OP indicator was spiking. I took a loss on some calls. I tried to re-enter on this bullish hammer in here. Got shaken out of the position. That ultimately was a pretty good entry, but I knew that on this bounce, because of this heavy selling, that there would be a good put buying opportunity. So I was long puts in here, made excellent money, actually bought some puts near the close. I did have a lotto trade that I tried, and I'll put that up on Friday. IBM was one of the stocks that was actually very strong relative to the market. And here you can see how in the last hour of trading, the stock tried to find support. Well, here's what the market did. The market sold off during this last hour. And let me try and overlay that. First of all, we're going to take off the VXX. And I'm going to overlay the SPY so you can see what the market did. And so we've got the market right in here finding support, and I thought we might get a nice little bounce in the last hour of trading, and I'd already seen IBM really racing up towards this high. So I bought the 144 calls that were going to expire in a few minutes, well, in about a half an hour, with the expectation that it would be able to get above 144. Well, the market did not cooperate. The market decided it wanted to stage one more nice leg lower. But look what the stock did. It held its own. We had some tails under body. I knew it would probably make a push if I got a little bit of help from the market. I was able to scratch these calls. I bought them for 10 cents. I sold them for 10 cents. So that's a lotto trade that didn't work, but I didn't lose money on it either. I was in the right stock, but I didn't get the market bounce that I was looking for. In my video Friday, I also mentioned early in the day, I believe it was right in here, maybe right in here, I said the market is not going to bounce the whole day. It will not bounce. You need to trade from the short side. If you took that advice, you did really well. And I said you're not going to see a bounce until the last half hour, if then. That's exactly what happened. We didn't get a decent bounce until the last half hour. Even then, it was tiny. So I did also highlight a few stocks on Friday in my video. Let's see how they did. And one of them was Apple. And I'm going to also remove the SPY overlay. So Apple has been strong recently, but it was not strong on Friday, and it's starting to show some signs of weakness. And unfortunately, every time I use this recording software, it interferes with my charting. But there's the daily chart of Apple, and you can see how this doji here came after that rally, that earnings rally, earnings after the close, first day that Apple gets to trade. It closes almost on its open. It cannot advance. Even though it tried to break out, it could not. The next day, it opened lower, closed on its high, but still a lower close. Yesterday, I started to see some really nice selling early in the day, relative weakness. So I posted the video in here. I said, Apple looks like it's weak relative to the market. And we can put that overlay back up. You can see right in here, Apple doing absolutely nothing. We get this market bounce right in here. Stock does nothing. Now this low is starting to falter right in here. Weak relative to the market. That is a bearish candle on a daily basis. You can see how it closed near its low. I think that Apple still has some downside to it. And you can see this upward sloping trend line right in here that's been violated. And you can also use this line right in here. Apple, who knows how far it could pull back? I just know that it's run up so much that there's a good chance that we'll see a retracement, probably into this, at least I would imagine 294 level is the first support level that I can see on it. So I think Apple's going to be a nice short if you're looking for one next week. BYND was another one. I like this stock short a lot. You can see the long tails above body. You can see the long red candles closing on their low. This 100-day moving average at 105, if that's breached, I think you can easily get short the stock. It's been pounded. This is a short covering rally. You can see the volume here. That short covering has run its course, and now it's going to start picking up selling momentum. I showed you this one early in the day also. I believe the video was in here. Beautiful, beautiful short. Made a lot of money on that one. Amgen was another short that I showed you. It actually rallied into the close. So for day trading purposes, it had this bounce right in here, kind of floundered. Once it broke through that level, that would have been your stop. But I do believe on a swing trading basis, Amgen still looks good. So you had a bullish hammer in here on Friday. This 100-day moving average should provide resistance. You can see earnings after the close, big sell-off Friday. So it's going to try and get above that 100-day moving average. This is your benchmark. If it gets back above it, you don't short it. But if it comes in and it starts struggling at that 100-day moving average, there should be a nice bearish call spread that you can sell. And if the stock starts rolling over, you'd be able to short it as well. But you need to see those price patterns before you short it. I like Apple short, and I like BYND even more. I like BYND the best out of the three. So again, I got to put this caveat out there. Shorting the market, very, very difficult way to make money when you've got the macro backdrop that we have currently. So you better be very, very nimble, and you better not overstay your welcome on the short side, because the tendency is always to drop and rally, drop and rally. So it's a herky-jerky downward price movement. Very, very difficult to make money on the short side. I would focus on the long side. So let's take a look at Boeing. You saw this in the swing trading video that I posted. That 305 put is what we wanted to sell. Look, the stock held up really well on Friday given the market selling. I still think this 305 level is so far away that support is going to hold. Stock was very resilient. COST, which incidentally, when I released the video, you would have seen it on Thursday, the first time, and the price action on Thursday for the market was really pretty soft. So you should have been on guard. You should have maybe been putting a few on, but kind of holding off and gauging the stock. And that's exactly what you want to do right now. Gauge the stock. You've got a weak market. This is when you can go in and look for relative strength and see how well that stock is holding up when the market is selling off. If it's treading water, that's a great sign. That means that stock is ready to fly as soon as the market finds support. So we'll go and take a look at Costco. I love this support level, this 105 support level. I think we were trying to sell a 104, 103 bullish put spread. I can't recall the exact spread that we were in, but the 105 support level is the one that I want to watch. So keep an eye on Costco. GE, I love the fact that it gapped higher after earnings. We wanted that opening price right there to hold. We did not want to have it be checked. You can see how Thursday it checked that price. Friday, we're below it, but still very resilient. This gap right in here, from here to here, should hold. I still like selling a bullish put spread on this. There we were short the 1250s, so they're in the money by a nickel. If you put it on, I think the stock is still in good shape. I still think it wants to move higher. If you haven't put the spread on, wait to see what the market does. Maybe you could sell the $12, the 1250, $12 bullish put spread. Maybe you can sell the $12, $12 1150. Let the stock come in. We ultimately want the support to hold right around that $12.10 level, right in here. Take a look at IBM. IBM's a loser. IBM was the one bearish call spread that I had on. Everything looked beautiful. Everything looked great. And then the stock flew higher through these major moving averages. On Friday, they had news. How would you like to be the CEO for 3 decades, and when you finally announce your retirement, the stock takes off? Nothing like getting the door slammed on your butt on the way out. So, yes, the market liked the news. They liked the fact that the CEO is going to be leaving. And when you take a look at the monthly price action for IBM, it's no wonder. That's what IBM has done. And let's put that SPY overlay. That's what the S&P 500 has done. How does somebody keep their job when the market's doing this and the company's doing that? I don't know. Maybe a change at the helm is good. So now what do I do with my IBM spread? How am I going to approach that? Well, I've got to watch for more strength next week. I've got the market pulling back, the market pulling back. If the stock is able to tread water when the market sells off next week, I'll know it wants to go higher. When I see that market support, I'm going to buy in my short call, and I'm going to expect the stock to rally intraday. When the market is running higher, I'll be able to leg out of the spread, mitigate the damage on it now that it's broken through major resistance. I still need to see that follow through in the stock. I still need to see that relative strength. I will leg out of this one though. Intel. What has Intel done? Intel, that is relative weakness. You can see the market did bounce during the day on Friday. Not Intel, straight down, so it's still got some sellers, but I do still like the stock. So the video comes out Wednesday night. We had this drop right in here. Then This was our thesis that that opening price right there was, or that closing price was going to hold. No. The next day we can see that it actually opened just below that price. Well, that's not a good sign. It tells me don't do that spread right now. It's going to try and come in and fill in that gap. That's exactly what it's doing. We want that 62.40 level approximately to hold on Intel. Let it come back. Let it fill in the gap. Let it find that support. We've got really nice horizontal breakout here at the 61.20 level. Let it come in. Watch for that relative strength. Right now, you don't want to do anything with it. Well, what do I do if I've got that spread on? If you've got the spread on, you're going to have to look. The 63.50 bullish put spread is what we sold, expecting this price level to hold. You want to see some relative strength in that stock. If the S&P 500 is down Monday and we come in and 63.50 holds during the course of the day, great, stick with the position. That tells me that even in that wave of selling on the SPY, that the stock is going to bounce and run. If we come in and we see the market flat, but Intel is drifting down and it breaks below that 63.50 level and closes on its low of the day, that tells me the stock is weak relative to the market. Shut her down. Let's get in on the next trade and we'll recoup our losses on it. We're going to get dinged here and there on some of these stocks, but ultimately, probably shouldn't have taken that spread, especially with that price right here being checked instantly. The first chance that you had to take a look at that stock on Thursday, not a good sign. And yesterday, by all means, the stock was weak relative to the market. So I may put these videos out on Wednesday night, but that doesn't mean come in Thursday morning and then bang, 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 just rip through them all. No, it's an evaluation process. It's on our radar. Check for that relative strength. If you see the relative strength, great. Then you can feel confident and put that spread on. J&J, really nice, really held up well. We're leaning on that 146.50 price point. Yes, I like J&J. So all told on these, Boeing, nice, looks good. We're way out of the money on this. Spread looks good. Plus, by the way, every single one of these spreads, I told you we're going to need help from the stock to get in. And that's by design. I wanted the stock to have to come in to get a better credit. We're not aggressive right now. We see an undertow in the market. We want to be relatively passive with our bullish put spreads. We've got about 25% exposure on bullish put spreads right now. We've been waiting for this market pullback, but we want to see signs of market support. We got great earnings reports coming out. We're evaluating them. We're watching the stocks afterwards. So, Costco, yes, still holding that major support level. Watch it. Had a little bit of a nasty day on Friday. So let's see if that support level holds. If the stock starts to grind, I think this is going to be a really nice one. It's a very stable company. GE, still like it. It should have a tougher and tougher time filling in this gap. I like it. I think this is going to be a really good bullish put spread. IBM, we already talked about. Going to have to adjust that. Intel, I wouldn't touch it until it bounces off of here and starts to show some relative strength. J&J still looks really good. So out of all of these, BA, GE, J&J, the best ones. Costco, possibly, but it needs to start showing some support. Go back to the market for one last recap. And folks, I'm transparent. I tell you everything. I tell you everything I do, whether the trades are winners or losers. We're going to have some losers. Fortunately, we have a lot more winners than we do losers. But losers are a part of the game. And we can expect the market to continue to pull back. So, last look at SPY. What might we expect? We can expect it to come down and test this 320 support level. We're looking for that big drop intraday. We're looking for that reversal where the SPY closes on its high, and then we want to see a long green candle closing on its high, ideally back above that 320 support level. We also want to see that on big volume. That will mark a capitulation low. That will tell me the buyers are very interested at that price point. That's when we come in and really go gangbusters with our bullish put spreads. We circle around. We use our searches to find strong after earnings stocks that are pulling back to those major moving averages. That's when we can get more aggressive, and that's how we're going to make money in the first quarter. of the year, selling out of the money bullish put spreads while the market moves sideways and grows into current valuations, and while the coronavirus worries start to dissipate. So that's it for today, the first day of the month. Good luck with your trading. Please subscribe to this YouTube channel. Give it a thumbs up if you like the content, but make sure to turn on your notifications because I post videos all the time. Every single one of them has an actionable trade in it and tons of education. Thanks for watching. Have a great weekend. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.